Investing in the stock market is not about chasing hype, timing headlines, or copying what everyone else is buying. It's about understanding how real businesses grow and how patient capital compounds over time. In the US market, the most consistent investors focus on fundamentals first. Companies that generate strong cash flow, grow revenue steadily, manage debt responsibly, and operate with durable competitive advantages that allow them to survive economic cycles. Stock market analysis begins with valuing businesses, not prices, because while markets can be emotional in the short term, they eventually reflect underlying earnings and long-term value. Smart investors also understand market structure, recognizing how interest rates, inflation, and the Federal Reserve policy influence borrowing costs, consumer spending, and corporate profitability, and they use these cycles to their advantage rather than reacting emotionally to volatility. Diversification across sectors such as technology, healthcare, energy, and consumer staples reduces risk and smooths returns, while low-cost index funds, like those tracking the S&P 500, provide exposure to America's strongest companies with a history of long-term growth. Timing the market rarely works, but time in the market consistently rewards discipline, especially when investors use dollar-cost averaging, reinvest dividends, and avoid pulling money out during downturns. Risk management is what separates investors from gamblers, only investing capital you won't need in the short term, avoiding excessive leverage, and maintaining a long-term perspective during market corrections and bear markets. Volatility is not the enemy, it's the price investors pay for higher returns. And those who stay rational when others panic are often rewarded when markets recover. The stock market has historically transferred wealth from the impatient to the patient, and successful investing is less about intelligence and more about behavior, controlling emotions, following a repeatable strategy, and letting compounding do the heavy lifting over decades. Whether your goal is retirement security, financial independence, or building generational wealth, investing works best when it becomes a system, not a reaction, where knowledge, consistency, and time align, so your money grows quietly in the background while you focus on living your life.